And I suspect, like Warren Buffett says, that time spent trying to forecast markets with as many variables as there are is trying to know the unknowable. I think that what your listeners would be better advised doing is to get their own house in order fiscally. The idea that we're going to get the American house in order fiscally seems to be a non-starter. So my suspicion is that investors must acknowledge the fact that the political class doesn't have their interests at hand, and organize their own lives in a way that they can defend themselves as well as possible, given the circumstance that faces us.
Bringing you more breaking news from billionaire investor Rick Rule, here we are once more. You've all heard him say that he thinks a crash like the one in 2008 is coming up quickly and could be even worse, so you need to get your house in order. That's a fairly odd warning coming from such a well-known investor, so let's find out who he is before moving on to the most recent news and asking him more questions. However, most of you might not be familiar with him. Rick Rule is the president and CEO of Sprott US Holdings Inc. He is also a well-known and experienced investor who specializes in the natural resource sectors. On Real Vision, Rule frequently speaks about how the precious metals market, particularly gold. Since the beginning of his career in the securities industry in 1974, Rick Rule has focused mostly on investments in natural resource security. He has financed countless exploration and mining companies throughout his 45-year career, and is a brilliant analyst and extremely successful resource sector investor. He concentrates on natural resource industry's public and private issuers with market capitalizations under $1 billion. Now that you are aware of his identity, let's move on to the market news before posing further inquiries to Rick. MicroStrategy, a business intelligence and technology company that currently maintains the largest Bitcoin reserve in the world, is seeking a Bitcoin Lightning software engineer to build a platform for software as a service based on the Lightning Network. According to a job advertisement on the MicroStrategy website, the new engineer will be in charge of developing a Lightning Network-based platform to handle enterprise cybersecurity issues and enable new e-commerce use cases. The applicant should possess an adversarial mindset, credentials, expertise with decentralized finance systems, and an understanding of tools and programming languages. If you guys don't know what the Lightning Network is, it is simply a Bitcoin Layer 2 protocol designed to raise payment throughput and lower transaction fees. It has been making slow progress in facilitating peer-to-peer transactions since it debuted in 2018. Furthermore, billionaire hedge fund manager Stanley Druckenmiller claims that cryptocurrency is gaining popularity as more people lose faith in central banks. Considering the recent state of the global economy, in which the world is battling both inflation and recession, Druckenmiller is optimistic about the return of cryptocurrency. In a recent interview with CNBC, Druckenmiller questioned the US Federal Reserve's unconventional monetary policies. Furthermore, according to Druckenmiller, recent Federal Reserve activity set off the largest asset bubble in history. He also cautioned that economic catastrophe would typically occur after such bubbles. The Fed, on the other hand, downplayed inflation-related concerns at the time, stating that it wasn't part of their mandate. Evidently, Bitcoin experienced a surge in 2021 before collapsing the next year as the result of the Fed's monetary policy intended to combat inflation in 2022. The annual CPI increased by 9.2% in June, but has since decreased to 8.2% according to figures from August. The central bank's ability to thwart inflation has pleased the hedge fund manager, but he is doubtful that they can avoid a recession the following year. Druckenmiller isn't very optimistic about the SEC's efforts to reduce inflation in general. Now, that was all about current market news. Currently, there is a heated argument going on right now in every market between fiat and cryptocurrencies along with other asset classes. Returning to Rick, let's hear from him what he thinks about fiat currencies.
That I said that while cash imposes immediate pain, in the sense that the deposit interest rates that you get paid guarantee you a loss after inflation, you have to have cash anyway. Because in a period of declining liquidity, particularly if we have a replay of 2008, the cash will give you the tools and perhaps the courage to take advantage of a situation rather than being taken advantage of. It is true that you are, after inflation, losing 4 or 5% of your purchasing power holding cash. But I have two observations. That negative interest rate that you suffer is really an option premium to allow you the liquidity to take advantage of the illiquidity of others. And as we have seen in 2022, losing 5% beats the hell out of losing 20% in other asset classes. So I continue to say that investors, despite the pain, must continue to be liquid.
Following this, let's hear from Rick what he thinks of the current market conditions. Is this the bottom, or are we going down even further? And if yes, then how can we protect ourselves? And finally,
this doesn't feel dramatic to me. People are angry, people are hurt, people are confused. People are not terrified. I remember 2008 very, very, very well. I remember that members of the public, not just the chattering classes, were concerned about the total breakdown of financial markets in the United States. People were worried about bail-ins. They were worried about their savings being confiscated by the Fed to salvage the banking system. I don't see that level of fear yet. In 2008, we watched major markets go no bid. Right now, we're just seeing markets go lower. I'm not trying to say that we are going into a period of full-blown panic. What I am trying to say is that investors need to be defensive, both with regards to their portfolios, but probably particularly with regards to their psyches. You are going to continue to experience lots of volatility. And if you have a strong psychological framework in your investments, you are more often than not able to take advantage of volatility as opposed to being taken advantage of by markets.
let's hear what advice Rick would give to the people who want to become successful investors and get a scoop into what he owns in his personal portfolio.
You can control. The biggest risk for you, for your viewers, is conveniently located to the left of their right ear and to the right of their left ear. Exercise common sense. Buy high-quality companies that generate lots of free cash and have decent balance sheets. Own whatever type of liquidity appeals to you. Live within your means. Buy a piece of real estate, not because real estate always rises. Buy a piece of real estate because you expect the rents to rise and you expect your return on capital employed to increase while your cost of capital decreases. If it doesn't, don't buy it. Investing is largely about discipline and common sense. And any of your listeners whose fear causes them to go into a cocoon, which is to say to do nothing, not to take control of their financial future, will certainly lose. But don't be afraid of the economy because of...
What do you think of all this? Do you agree with the views of Rick Rule? Please share your thoughts below in the comment section. They always generate interesting dialogue. If you found this video interesting or helpful, don't forget to like and subscribe to our channel and hit that bell icon so you don't miss any of our future uploads. And while you're still here, click to watch one of these two videos appearing on your screen right now. Each one is a value-packed dive into some of the hottest topics in crypto. Thanks for watching, until next time.